Hi, Ricardo. Can you hear me? Welcome back, Liam. Here comes my boss, Cornelia, Professor Alsheimer. Good morning, Joaquin. Here we go. Here's the boss.
Good morning, everyone. Can you hear me?
I can.
Okay. Hey, good morning, Ricardo, Joaquin, and Liam. So far, 3 students. That's great. Aren't you happy you're taking an online class and that you don't have to throw yourself out in the rain? Yeah, it's not a great day for first day of classes. I just talked to and the instructor of our 8 a.m. class, and only 11 students showed up to his class, which is kind of sad.
Oh, really?
Yeah. But
What class is that? 110?
the accounting 110. Yeah. Yeah, but it's really, I mean, what can you say when there's so bad weather out there? Which is not really bad weather if we were on the East Coast, but I think for California, it's really bad weather.
Yep.
So, all right, everyone, let's give others like maybe a minute or two to sign in, but I'm happy you are here. And we are recording this meeting. This is Accounting 230. And you have both of your instructors here, which is me. My name is Cornelia Alsheimer. And then we have Bob Smagula, Robert Smagula, who will be the person you will see most. I'm mostly in the back, dealing with Canvas, dealing with our Connect textbook companion. And that's why I'm also here this morning, because I'm going to walk you through the class. You're welcome to leave your cameras off, but you're also welcome to switch your cameras on. Bob, can you give me sharing rights, please?
Oh, yeah, hold on. You're on the air.
Oh, I'm on the air. Okay. So. No, host disabled participant screen sharing. Can you let everybody share? I think you allowed the wrong Cornelia to share. Just let everybody share.
Remove co-host permissions. Okay.
No, you could.
No, I had to do that first, though.
Yeah. Otherwise, you can go to the green.
I'm in you, and I'm going to hit make co-host. Let's try one more time.
Okay, that's good.
Do you want to make Cornelia the co-host?
Yeah, no, you need to, sorry about this. There's 2 of me.
Okay, I'll do the other you. Jesus, hold on. Excuse me. Okay, that should work.
Okay, now we are good. All right. So number one, welcome. Let's get started with our class. To make sure that you find our class is you go to canvas.sbcc.edu or you click in pipeline on Canvas on these little icons here, and that should bring you to your dashboard, and there should be a number of classes. There's a lot of classes for me because I also have my fall classes still on there. But our class, that is this one, and I hope you see my really cool icon here. That is our class. Maybe you don't see the picture, but maybe you do. Definitely you want to see our number accounting 230-54282, and that's us. And I welcome everybody in the room. Again, my name is Cornelia Alzheimer. I'm one of the teachers for this class. The other one is Robert Smagula. Do you guys want to real quick introduce yourself since you made the effort to be here? Just unmute yourself and say your name and why you are here and where you are in your accounting journey, maybe.
Hi, I'm Liam. This is my second accounting class, and I'm really excited for this one because I'm actually also applying for an internship this semester in accounting.
Did you take one time, Liam?
I did, yeah.
Who was your teacher?
You.
Oh, that's right.
Bob, that was not so good. Hey, Liam, where are you taking your internship?
No, Liam was very good in my class. I'm sorry, I'm teasing.
It's actually with the county.
Oh, with the county. Okay, that's great. Okay. Okay, anyone else who would like to introduce yourself for now?
Hello, my name is Ricardo, and this is my first time taking accounting. And I am currently taking this class for my real estate and business degree.
Oh, cool. Perfect.
Excellent.
That fits perfectly. Great. Thank you, Ricardo.
Yeah, we get real estate people here once in a while like that. Yeah.
Yeah, I think I'm the same way as Ricardo. My name's Joaquin Alarcon, and I'm taking accounting for my real estate and for business.
Great.
And
Excellent.
my first accounting class.
Hi, I'm also taking accounting for real estate. My name's Pam Christiansen. Nice to meet you all.
Nice to meet you. Oh my goodness, all real estate, a lot of real estate people. Okay, great. So let me share my screen again. And thanks for introducing yourself. So again, you go to Canvas as canvas.sbcc.edu. It should bring you to your dashboard, and you are clicking our accounting 230-54282 class. Depending on how many classes you take, there could be a lot of these classes. All right, so this is, and I want to be very upfront with this, this is an 8-week compressed course. It's not full semester. So basically we are going double speed. This has the main advantage that everybody who passes this class, and I hope this will be all of you, at the end of this 8-week session, you can immediately enroll in our 8-week late start managerial accounting class, which is a 4-unit class. So it's a little bit lighter than this one. This one is a 5-unit class, but that one then also will be compressed on 8 weeks for the second half of the semester. And so you are actually like in this, like this is the only class which gives you the opportunity of taking both major transferable core accounting classes in one semester. But just to, and that's why I'm saying this, we are on a pretty tight schedule. And it's quite a lot of work because, again, it's a 5-unit class. So I want everybody to be aware in case, like, it's not so obviously when you just look into the schedule of classes. You do see the little 8 on the right-hand side, but only if you look, right? The other classes all have a 16 for 16 weeks. So this said, I don't want to scare anybody away. I'm so happy you guys are here. I would like to show you how we organize the class and how you best kind of like make sure you're getting a running start with us and yeah, be successful in this class. So there's always in Canvas, there's always a lot of ways to approach things. And so when you come to our homepage, I hope you have read it all. There is a link to for sure to our Zoom lectures. There is also to our Zoom tutoring sessions. And I will give more times than the ones than they are out there as we go along. And we also have in-person sessions in case you are local and you're just taking an online class because it's like better fitting with your works and family obligations. So you are always welcome to participate in our in-person tutoring. We once in a while will also have in-person offerings at the college. You're always welcome to show up. So the fact that you are taking an online class does not preclude you to participating in our on-campus offering. But again, we have online tutoring for you specifically on the weekends because we learned that from students that this is very popular. And then we have our optional Monday, Wednesday, 9 a.m. lectures. First one today, which will be recorded. So you are recorded today. And I think you got like a little alert when you signed in. And we will post those to our Canvas course shell. To make sure if you want to be flexible and you want to learn ahead of time, we always keep last semester's recordings up there until the new one is completed. So if you want to learn ahead of time and you will see Bob's lectures from last semester, that's all a possibility too. So now let's start a little bit with the syllabus. And by the way, please interrupt me right away if you have a question. There's a syllabus link here on the homepage. There's also, when you go to the syllabus page on Canvas, there is also a link here. So it should get you to the same document. And let's pull that up. Here's our syllabus link. Okay, you'll see contact information for me. I also put my cell phone number up there because I understand this is a fast-paced class and sometimes you need fast answers. And the fastest way to get a hold of me is via text message. I would like you to remind you, please, save it for really urgent matters. But again, I give you this for a reason, so don't feel afraid to use my phone number. Why is this not exactly? Let me download it. Working as so. So I also encourage you to download and to print your syllabus, right? So that way you have it handy. So this is our syllabus. It tells you a little bit about the class, student learning outcomes. That's just like interesting things to read. Course description. Important is the textbook information. So the textbook information, we are using John Wilde, 8th edition. And
Cornelia,
so,
are you sharing with us?
Oh, yeah, I'm sharing. Okay, I changed. Sorry, I always have to remember if you change from the browser to a Word document, it stops your sharing. Okay, here you go. I'm sharing again. There we go. So if you scroll down, then you see the textbook information. The textbook is available at our bookstore. You also can go just with the online version. That's probably the most cost efficient. And I know you guys are all young and you grew up with this. I'm such a paper person. But if you are okay with a textbook, with the e-textbook, taking this class should not cost you more than $66. We have like negotiated this price. If Connect gives you another price, check back with us. Maybe you are not clicking the right link. For the start, I would definitely go into Connect and just click on the free 2-week courtesy access. That way you can like figure out for 2 weeks, is this class right for me? Especially because it's a compressed format. So that gives you a little bit of time before you have to pay. If you are repeating this class, I didn't hear this from anyone here in the room, but if somebody hears this recording, if you're repeating the class, also please check with me while you are working with a 2-week free courtesy access. I might be able to give you a free repeat from the publisher. That's what they usually do for us. Okay, so accounting is learned by doing. That means you have a lot of assignments. You might complain about the workload, but it is really important to just repeat the steps in different ways so that you really like internalize them. So we have several sets of assignments, and here's the good part. Because we have many assignments and because the assignments carry quite some points in total, the focus is the pressure. Let me say the pressure. The pressure is somewhat taken off the timed exams because you can make sure that you get a lot of points through the regular assignments. We have chapter summaries. We want you to summarize every chapter, and we want you to do it, please, by hand. There is research that handwriting, whatever you write down by hand, is sticking much quicker and much more effectively with your brain. And so this is the reason why we are asking for handwritten assignments. Even I know some students say this is so ancient. There's a reason for this. And then you please upload your summary, your chapter summary. Either you scan the pages or you just take a cell phone picture of each page. Please make sure that it's kind of a clear picture, and then upload this to Canvas. I already mentioned that we have an online textbook companion, and that is McGraw-Hill Connect. On Connect, we have several assignments. We have SmartBook assignments. This is kind of a question and answer interactive program. Suggestion is read the chapter first, summarize it, and then do the SmartBook assignment. Because if you have a lot of incorrect answer, the program will just ask you the same question, just in a little bit of a different way again. I have set every SmartBook assignment to last 45 minutes. So if you have read and summarized the chapter before, it really shouldn't take you more than 45 minutes. If you say, okay, SmartBook is the way I want to learn, totally okay, but it might take you 1.5 hours to finish it then. We also have the Connect homework exercises. We have a chapter quiz. We have video exercises. Video exercises, you go into the Connect in the Connect site. You click on an exercise, it shows you a little video, and it asks you questions about it. It should be easy, a really easy assignment. The chapter homework exercises and the chapter quizzes are a little bit harder. So this is the regulars for every single chapter. Those 5 happen for every single chapter. in the over the whole 8 weeks, we have 2 larger research assignments for you. We call them financial statement analysis assignments. And basically we are looking at 2 real life companies. And I'm not sure what Bob is selecting this spring. But we had like Kellogg's and General Mills, for example. We had these cereal companies in the past. We had Coca-Cola and Pepsi. We had also non-food companies. So let's see what Bob will pick this semester. And what you actually going to do is you will look at the actual reports that they report to the SEC. And analyze the numbers in those reports. And then we have, not for every chapter, but quite a number of discussion posts. There are also 10 points each. Usually you get 1 a week, and that is usually due on Sundays. We hope that you can stay on track with your assignments, but we understand that sometimes things do not work out, and you might like submit assignments late. There is a 25% deduction on all late assignments. Here's the thing: if you are ending up submitting your assignment usually it's midnight is the due date. If you are submitting an assignment shortly after midnight, I will not deduct you points. But the problem is Connect is not forgiving. That will immediately deduct points from you. And I'd be happy to, if you happen to submit your stuff like a minute late or whatever, half an hour late or an hour late, I can go back and override it, but it's always really hard. But number one, I want you to know that this is going to happen. It's not because your instructors are overly picky, but it's just the way the online system works. And also, again, if it happens and you say this is really not quite fair, and I would totally agree that for a few minutes you'll get in the middle of the night when it's neither Bob nor I will be up to actually grade your work, I will give you your points back. But please also, if you happen to miss an assignment, make it up. It's still 75% of the points. That's still good. It's better than nothing. Then we have exams. Again, the exams are only 300 points out of about 1,000 points. Again, Bob and I do this intentionally so that there's the pressure taken away from the exams, because you can do all these regular homework assignments and capture all the points. So then there is are a few hints. If you are one of our DSPS students, or you want to get yourself tested, please work through DSPS so that Bob and I can assist you with any accommodation you need to be successful in our class. I also have to write down a little bit about student conduct and academic honesty. Please always submit your own original work. You are taking all these classes for a reason, and I heard today that a lot of you want to go into real estate. And if you have your own real estate business or you work in a real estate business, you really need to know this stuff. So you need to do the work. And Bob and I promise that we do everything we can to help you master the material. And accounting is not rocket science, but it takes work to do it. Again, we have one of the ways we want to help you is that even in an online class, we are offering live lectures Monday, Wednesday, 9 a.m. Maybe you can try to, at your workplace, take an early lunch break or mid-morning break, or start work later. It starts at 9. Usually Bob will need at least an hour to finish it, sometimes an hour and a half. So then you see our grading system. And then at the very end, there's a schedule when what is due. But again, this is the paper schedule. It's good to have it and print it out, but you also will see all these assignments pop up again on Canvas. As you can see, we have our regular, this week is different because it's the first week, but regularly we have assignments due on Wednesdays, on Saturdays, and then the discussion on Sundays. Okay, always at midnight. But again, the first week is a little bit different just because you only learn about this. I think I opened the class on Saturday, and today is the first actual official day. Okay, so this is all in there. We are covering a total of 12 chapters plus it's like a smaller chapter. It's called Appendix B. It's not an appendix to a certain chapter. It is a standalone chapter, and we treat it as a standalone chapter, but it's just, it has this weird name. I just want to let you know. So, any question by anyone at this time about the syllabus? Okay. All right. And again, yeah, you have a question, Joaquin? Yeah, go ahead.
Yeah, so I was looking over and we already have assignments due today, correct?
No, tomorrow.
Oh, it's due tomorrow?
It's due tomorrow. This week it's Tuesday, Thursday, and Sunday.
Gotcha.
And it's tomorrow. I can double check. I hope I didn't get confused with the dates. And by the way, if you see anywhere where if there's a mix up with dates, please alert us immediately.
Okay.
The assignment is, I think I sent a message out. Today is the lecture. Tomorrow we have 2 assignments, and these are the easiest ones in the semester. So enjoy. It's a welcome discussion post where we just would like to learn more about you, and we want you to learn more about your classmates. So what we want a little post about yourself, and well, I'm not sure if Bob posted a picture. I posted a photo and did a little write up with a fun fact. Like, what did I put as a fun fact? I think I put that I have, it took me 11 years to get my intermediate referee certificate with AYSO, right? So I like to share that because I tell you, persistence sometimes pays off. So I'm an intermediate AYSO referee now. Or that I have 3 boys. One is 10, one is 20, and the other one is 30. That's I also have a daughter. She's in the middle. She did not quite fit into that 10 into my accounting 10, 20, 30 kind of like spacing. Yeah. So share this with us, and also always for all discussion posts, please respond to at least 2 other people. But it also this will be listed in the description. And the other assignment that we have due tomorrow is the syllabus quiz. So you just read the homepage, read the syllabus, and then answer a few questions, and boom, you have your points. It's really gentle. We want to give you an easy start in. And then chapter 1 is due on Thursday already. And then I believe we already are moving to chapter 2 on Sunday, but we find this out right now because I'm going to go and share my screen again to look at Canvas. And so as you may remember that we started out with a syllabus page. The syllabus page lists for each day the assignments. Oh, I forgot. There's extra credit due tomorrow too. Okay, so there's so tomorrow, as I said, and this is an example for this is incorrect. Need to know videos. I'm going to move that to Thursday. That's a mistake. But the syllabus quiz is due tomorrow. The welcome discussion forum is due tomorrow, and then we have tomorrow also 3 extra credit opportunities. for you. And I believe there is no late penalty on those, just because we are so early in the semester. Please do them to get extra credit, even if you are familiar with Connect already, but some people are not. So that's why we really want to encourage you to do that. But if you just want to click through them because you know all that stuff already, but you want to make sure you get your extra credit, please feel free to do so. And then again, on Thursday, we have all these Chapter 1 assignments, which you see here. The reading is not really an assignment. The reading is only the textbook, but everything else you actually have to do something. And then we have Chapter 2. And as you see, there's more extra credit coming up. I really have tried to put extra credit in. So this is how our class, how you can find the assignments in syllabus. There's, as I said, there's other ways to find your assignments. And one of the other ways is, for example, the modules page. As you can see, there's our welcome module. There is a few resources, and then these are the assignments which are due on Tuesday for the welcome module, the welcome discussion forum, the syllabus quiz, and the three extra credit assignments. And then we are getting to the first actual chapter. So you always have a start here page. Always. And we also encourage you to click it. It gives you a little bit of an overview what we are going to talk about in this chapter. And then it has this nifty to-do list where every assignment is actually linked. And also there's the assignments, but also the reading, and also the link to the live lecture, and also the link to the lecture recording. So basically all the chapter material which you see listed and then later in the module is on that start here page for every chapter. And then the modules itself, every module is organized the same. At the beginning, that's all the resource material. The start here page, the link to the e-textbook chapter, the lecture material, including the live lecture materials. And as I said at the beginning, we are keeping last year's lectures on it until we post the new one. And then the PowerPoint slides. Some people like them to just walk through the PowerPoint slides, which we are using in the lecture. If you don't want to use those, there's no harm in never looking at the PowerPoint slides. If you watch or come to Bob's lectures, all those slides are covered. And then there is a little break, a little new header here. It says graded items. And please, please, please make sure that you are getting all these done. And I do see that for need to know videos, I need to change the date because it says January 23rd. My mistake. And then the second chapter is coming up on Sunday. So Bob's going to lecture on it on Chapter 2 on Wednesday. Again, the first week is a little bit out of whack, but just because it's kind of today is the first day we meet each other. And then that is the stuff for Sunday. Again, you have a start here page. Same thing, little summary of what we are going to do. Then all the links to the assignments and to the resource material. Then on the top of the module, you see the resource material. And then on the bottom, you see the links that take you to the graded items. Okay. And then Chapter 3. Now we are going into the Wednesday, Saturday mode, right? Chapter 4 and so on. And then our first exam comes after the first 4 chapters. And we have, for the exams, we have a review lecture. You have it on basically the day before the exam is due. But again, the old recording is posted, so start reviewing as early as you want. We have a practice midterm, which I totally recommend that you take at least once, maybe twice, just to get you into the groove of things and see what is going to expect, what you have to expect in the actual exam, so that you are not surprised about the type of questions, and the wording, how those questions are asked. And then there's this actual exam, because the practice midterm you can take as often as you want. The actual exam you can only take once. Okay. For the exams, I give the number of questions. I give you the number of minutes you are provided. It should be enough time, but it is time because we want to see how well did you master the material. Yeah, please make sure you find a quiet place, you find a place with stable internet access. We have a learning resource center here on campus, and we have a library here on campus, where if you have a little bit, and maybe you're shared housing and you have a little bit of a loud or not so quiet living conditions, and if you are local, please feel free to utilize them. And then there's another extra credit. Oh my goodness, they gave so much extra credit for this class. So there's no reason for you guys to not get an A. So that's like the bottom line. So let me real quick go to click. Wait, first of all, any questions on how the Canvas page is set up? I don't see any. Then I'm going back on the Canvas page. And here are the here we are on the module page again, but I would like to focus on this left-hand taskbar, that in the moment you are clicking on our class, no matter which page you are on, come on. The taskbar should pop up. And for you in student view, let me go to student view real quick. So it shows you the home page, the syllabus link, the modules page. It shows you a direct link to these live lectures. It gives you a direct link to the tutors, a link to all the past announcements, but also remember the announcements come directly to your pipeline account. So please check your pipeline accounts. There is an option to kind of like just forward your pipeline emails to your personal email account. But please make sure that you do check your pipeline account. I'm sending you reminders when usually like on the days of the work is due. I'm sending you reminders. I will send you once the tutor hours are finalized. I will send you an email, etc. Then under the people link, you find the people in your class, grades, that's your grades. McGraw-Hill, you can click that to get to the textbook companion, or click any Connect assignments, the smart books, the video exercises, the homework. Pretty much any link which comes from Connect will take you directly to Connect. There's also student support services. I got your link there. The IT tech support services that are available to you, and then NetTutor. NetTutor is a tutoring service that is not SPCC, so it's not our tutors, but it's live tutoring. Can I click on it? Let's see if it's coming on. It's live tutoring. I don't think that they are on. I'm not sure if it's like, I have to probably go out of student view. Unfortunately, if I want to pretend I'm a student, it's usually not working well for me. So I leave student view, and then usually it should work. if I go on NetTutor, where do we have it? Okay, now my link disappeared. This is great. Okay, do you still these? No, here it is. So, and now I have to share again. No, that's guys. I'm sorry. You need to click on NetTutor yourself. It shouldn't be too difficult. It's just not working for me at the moment, but it should work for you. What it does, I believe Sundays through Thursdays, they are offering live accounting tutoring from 2 to 9. You just look for accounting, it's on the top. By the way, you guys take real estate. I bet they have also somebody for real estate. They definitely have somebody for business. They have tutors for on any other classes that you might take, your general ed classes, if you're taking also history classes or English classes, they have tutors for everything. Accounting is really convenient. We are on the top because we are starting with A, right? And because accounting is the most important subject around anyway, right? I think we can agree on that. So why the heck is this not working? Okay. So let me share my screen again. So I would like to just like go and take the opportunity and show you what to expect in your from Connect. So again, you could like click on the reading. What's going to happen is it's going to pop up this screen. That's what you should see. And then you click on launch. And that is the reading. And it says, it's unfortunately always a lot of clicking. And then you should like get directly to the first page of that textbook chapter. Okay. And then you should see the same thing that you see if you have the actual textbook, right? You should see the same pictures. Here's how you turn the page, and then you can read. And my suggestion is you read, you take really good notes, and that could be your chapter summary. Please take clean notes, put a lot of effort in the summary. I sometimes believe that if it's not the most important of our assignments, it's one of the very important types of assignment, that's chapter summary. So please put a lot of effort in. You can also, if you want, just like do little like flow charts, include flow charts or drawings in there, use different colors. Students often get very creative in doing this. So we are then going, one thing I also want to show you is, I know I have too many tabs open, but just so that you are aware, in the moment you click on a McGraw-Hill link, it will open McGraw-Hill in a new tab. And also, if you then open the textbook, it will be in another tab. So the back button, there's no back going back here. You actually have to, if you want to go back to your Canvas page, you actually have to click on that on the Canvas tab again, right? So not that you are desperately looking for a back button and there isn't one, right? So because you have, it's always opening itself in a new page. Also, make sure if you have trouble with Connect, make sure you are using the Chrome browser. That also works best for Canvas, by the way. And also make sure that you have pop-up allowed for McGraw-Hill Connect, because otherwise it might not work. Again, same thing happens if you, for example, click on our Need to Know videos. That's this little video assignment. You launch it, and then you can start doing this assignment. Sorry, I need to go into Students View. I hope that works. Okay, and then you just get started with your assignment. Okay. right? So these are the video assignments. You watch this little video. It should be
Classify each of the
a
following
few
as assets, liabilities, or equity.
a few minutes, and then there's a question, and then you are done. Okay. When you first time click on a connect link, it will ask you to register. And again, I'm recommending that for starters, select the 2-week free courtesy access, and then go from there. Don't worry, it will remind you that you still need to put, if you bought it from the bookstore, if you bought a hard copy of the book, it comes with an access code. If you go with the online only, it will remind you to put in your credit card number or the access code if you have one. And by the way, if you miss the window, if you put all the work in and then the 2 weeks are up and you forget to kind of purchase the access, your work will not be lost. Your work will still be there, even if it's a few days between the day of the last day and then the time you pay. So no worries. And again, if you repeat this class, or if you have classmates in the class who do repeat the class, don't pay, check in with me. McGraw-Hill has been very kind, providing us with free repeats for students who purchased the access before. So before I'm leaving you in Bob's capable hands, and he's starting chapter 1 lecture today, actually finishing chapter 1 lecture today as well. Any questions for me as it has to do with assignments, Canvas, Connect, or anything else? So I don't see any. And again, remember, you have my cell phone number. It's on the syllabus. Or email. If you email me and you do not hear from me within 24 hours, and I'm really trying hard to respond to email same day, but I'm not only an accounting instructor, I'm also the president of the faculty union. And I just get so many emails that there's always the risk that I see your email, I want to respond, then something comes up, and by the time I go back, there is 55 emails on top of yours. And so I'm asking ahead of time for forgiveness. Just send me a text and say, hey, instructor, I'm in your 8-week accounting to 30 class. I sent you an email yesterday morning. Please look at it, or resend it again, or do both. Okay, so I'm asking ahead of time for forgiveness here. And then if there are no questions, go ahead, Bob. Bob, you have your slides ready?
I do, just about, yeah.
Just about. Then I let you go, and have
Okay.
a great start of this class, of all your other classes. Have a great semester. See you soon. Bye.
All right, everybody. Give me a minute just to get the slide going here. We're gonna go through chapter 1. It's not a buzzsaw, it's not a long chapter. And I know you've been sitting here for a while, and we want to make good use of the time. So let me get the slide going right here. Come on. Okay, hold on here. Okay, let me share the slide with you. Okay, can somebody verbally tell me you see the slides?
I can see it.
You can, that's an important comfort for me. once in a while, I forget to share the slide and I go on babbling and I look like an idiot. Okay, here we go. Financial accounting. This is the next level above accounting 110. Those of you who took 110 will have a slight advantage because the first couple chapters of this course are pretty much locking up all of accounting 110. And we're doing it in just a couple of weeks. So we do want to keep up with the weekly activities, and you'll do well. Believe me, you keep up, you'll do well. The importance of accounting, identify its users. Who uses this information? The importance of it. Accounting is an information measurement system. We record transactions, and at the end of a fiscal period, we're going to prepare financial statements. We're going to prepare an income statement, an equity statement, and a balance sheet, which you're going to learn about in this first chapter here. And it's going to go out to people who use this information. Companies just don't prepare financial statements just for the heck of them. So who uses this information? You have external users, internal users. Accounting is the language of business, and using these financial statements, we can make some decisions about the future or about things we need to adjust now. External users, shareholders and lenders come to mind. If you're a company that wants to borrow money from a bank, you are not going to be able to do it without audited financial statements. So anybody who's thinking about loaning you money, they're going to want to know what your financial statements look like. Shareholders, stockholders, people who might be thinking of investing in your company, not going to do it without some decent financial information. Non-managerial employees. You may be a secretary, perhaps, or somebody, a blue-collar worker, and your company offers a 401k in which you can choose to invest in the company. You're going to want to look at the financial stuff. And of course, the internal users, people who work for the company, purchasing managers, they need to have a window of what they need to buy in the future, when to have it delivered, what quality. Production managers, they are always being held to a standard, and they want to make sure that the financial statements are okay, etc. So external, internal users. Here they just talk about opportunities in accounting. You're not going to get into this too much. The majority of opportunities are in private accounting, where you work for a business. You knock on a door and you say, I'd like to know if you have an opening in accounting, and they say, we do, you're hired. Private accounting. Public accounting, these are the auditors who come in to your company and perform the necessary tests and schedules and determine whether your financial statements are prepared on what's called a GAAP basis, generally accepted accounting principles. And they give you a non-qualified blessing. You can use those financial statements to communicate. Financial, managerial, taxes. Taxes is an area I never had any interest in. Accounting related. Let's see what we have here. Artificial intelligence uses software. Accountants are getting involved in artificial intelligence. I'm not going to go into that too much. Ethics, huh? Ethics and GAAP. Ethics. For information to be useful, you got to be able to trust it. Ethics are beliefs that separate right from wrong, accepted standards of good and bad behavior. And the jails are filled with accounting officers who disregarded their ethics. You may be in the workplace and your boss tells you to record a sale that was not made. And you say to the boss, we didn't make the sale. What are we doing? And the boss says, well, we have to pretend because we promised to report $1 million worth of sales. You gotta identify that. That's an ethical problem. Consider your consequences and make that ethical decision. It can be hard. It can be very hard. It's awful to be put in that position, but it can happen. I like to talk about this just a little bit, what we call the fraud triangle. None of us are billionaires, as far as I know. All of us are, to some extent, watching our money. Many of us working now, going to school, money's tight. Very easy to lapse into some bad behavior, let's say. You are under financial pressure. So is most of the world. You could really use a few extra bucks. And you have an opportunity at work where you think you can get away with stealing something. Pressure plus opportunity. Well, you then say to yourself, well, everybody does it. It's not a lot of money. They'll never miss it. The fraud triangle. These three pressures come together, and it's easy to become a criminal. And I always like to tell the story about this woman who worked for the Santa Barbara Police Department, worked there 10, 15 years, kept getting nice promotions, and they trusted her so much, they gave her control over the accounting records as well as the computer system. And she was honest as can be, but she was under financial pressure. The opportunity arose when she realized she could take the checks that we pay in traffic fines, delete them from the system like they never happened, and put it in her bank account. This went on for years to the tune of about $500,000. And I found it very sad to see this poor woman arrested on television and perp walked into jail. Accounting has a lot of acronyms. We love these things. Generally accepted accounting principles. This is the first and most important, I think. Generally accepted accounting principles. These are the rules of accounting. These rules come from the higher up authorities that we're going to discuss, and they tell accounting people and financial people how transactions are to be recorded, how events are to be interpreted and communicated. You can also interpret it, I guess. Okay. Who sets the rules? FASB. Hello, another acronym. Financial Accounting Standards Board. They get their authority from the SEC. You've all probably at least heard of the SEC, the Security and Exchange Commission, government agency that pretty much oversees the stock market. You cannot put a company stock listed on the New York Stock Exchange or the over-the-counter or whatever without FASB making sure you're doing things properly. International, not going to go through that, okay? No international stuff here. Conceptual framework, objectives, we want the accounting to provide useful information that's worthwhile. So we'll go through there. I'm going to fairly quickly go through principles, assumptions, constraint. What we're talking about here are there some assumptions, there are some rules in the world of accounting that you'll eventually become familiar with. A few in this chapter right here. I'm not going to read through all of these, but they love to put these on the test in a couple of multiple choice questions. For example, the revenue recognition principle. This is the first one you're going to learn, maybe hopefully today. The revenue recognition principle and its opposite, the expense recognition principle. This says that revenue or sales are recognized when the goods are provided to the customer. Has nothing to do with whether or not the customer's paid us yet. revenue recognition principle. When the goods are sold, expense, the opposite of a revenue. The recognition principle says that you record the expense when it takes place, not when there's any cash involved. And they have other principles that I'd like you to read through here. I don't expect you to memorize them, but if you hear going concern assumption, you kind of or put yourself in a position where you know enough to answer a couple of these multiple choice questions that come up. The two principles, revenue, expense principle. Not going to talk much about the structures of businesses. You'll get all you want of this in Introduction to Business or any future business classes you might take. Sole proprietorships, partnerships, corporations. Sole proprietorship, real quick, one person is in charge of everything. One person takes all of the risk, reaps all of the rewards of the company. Easy to set up. You open up a store on State Street, you pay a fee to the city of Santa Barbara, and you're in business. The downside, if you will, of a sole proprietorship is this: personal responsibility. If you invest, let's say, $10,000 in a business and it goes belly up and you owe $100,000, you're on the hook personally for that $100,000. They'll come and take your car and some other things. Partnership, two or more partners, easy to set up. It has the same type of liability as a sole proprietor. Partnerships can have two or more people, of course, different talents perhaps. One's a good salesperson, the other one's manufacturing. Problem with a partnership is if the partners start to disagree. And I'm going to be a little bit silly here to make a point. I like to show Law and Order, the old repeats of Law and Order on television. And it seems like half of the dead bodies they find at the beginning are a dead partner. They open up as wild. He was a partner in a law firm. Partnerships. As long as you get along, probably okay, huh? Corporations, that's you and me buying stock in a company. We invest $1,000 in Microsoft, and Microsoft goes out of business, God forbid. All we're going to lose is that 1,000. We have no liability beyond that. Cost benefit constraints. These are different principles again. Materiality. I'll talk just real quick about materiality. That was my favorite. A company issues financial statements and they find out they made a mistake. Microsoft issued financial statements to the world, and then one of the accountants said, boss, tells Bill Gates, we did not record $100,000 worth of expenses. We missed it. Well, $100,000 is such a small, tiny number in the context of Microsoft. It's going to be deemed immaterial. We don't worry about it. If it's a little more than that, then we do. So you have all these terms here. For those of you who took 110, welcome to the beginning of 110 here. The accounting equation. You will know this better than your name. Assets equal liabilities plus equity. Assets equal liabilities plus equity. Asset. An asset is anything of value owned by the company. Assets are hopefully useful in generating profits. Assets. Cash is a wonderful asset, huh? Inventory. Accounts receivable, which is the amount of money your customers owe you at that point in time. So you might have a company with assets of, say, $1 million. You're going to look at your liabilities. Liability is a debt. Liability is how much money we owe to other parties. And we have to make these payments in the short term or maybe in the far term. Liabilities, payables that are due to your suppliers, your salaries due to employees, tax authorities, all kinds of things. So we said we had $1 million in assets. Now I'm going to tell you we have 400,000 in liabilities. That automatically means that the equity of the company is $600,000. This company is worth on paper 600,000. Assets minus liabilities, assets equal liabilities plus equity. Let's go through some transactions. We're going to do them without regard to debits and credits yet. We're not up to that. That's our next chapter, I believe. But let's get familiar with working with the accounting equation. And Charles Taylor, he forms a company called Fast Forward. He invests $30,000 in cash and in exchange for stock. Okay. He has a business now. So what is going to be impacted? What accounts? Cash, of course, that's an asset. He has no liabilities, so his equity is also the 30,000. And the component of equity we're talking about here, we're going to call it common stock. Common stock. So take a little peek at your equation here. Assets equal liabilities plus equity. Not too tough. Let me continue along here. He bought supplies for cash, $2,500. Supplies are an asset at the time of purchase. It becomes an expense when you use the supplies. So for right now, he bought a bunch of toner for the machine. He bought some packaging, whatever. He paid cash. Cash is an asset that's going down. We just said that supplies are an asset that's going up. So what we're talking about here is just an exchange in assets. So here we go. We're in balance. We now have 27.5 in cash. Cash went down 2,500, but supplies went up, and we're in balance. We have no debts yet, no liabilities. Bought some equipment. Equipment is an asset, and the definition of equipment is a long-term asset that's going to be around for years and years and years, and hopefully utilized to make some money. It can be a manufacturing machine, computer system, vehicles, perhaps. So this guy bought some equipment for $26,000, and he paid cash. Man, he's really dragging the cash down. So take a peek at it, please. Your cash is down to 1,500. Supplies 2,500. Equipment 26,000. They all add up to the equity of $30,000. Now let's pay it. Let's pay attention here. Not that you're not paying attention. Purchase supplies on credit. On credit. This is also typically called on account. What this means is we bought an asset from a supplier, but we don't have to pay him yet. Isn't that great? We increased an asset because we bought the supplies on credit or on account. Whenever you hear those two words, on account, you know there's no cash involved. And that's a very important distinction to get clear as we begin here. So let's see what happened. Well, we don't have to pay the guy. Certainly we're gonna have to pay him. Yes, but we're gonna pay him in the future. Our supplies went up 7,100. Accounts payable. An account called accounts payable also went up 7,100. Accounts payable is the number that we owe to our suppliers. Simple as that. In this case here, we have a new asset of 7,100. We haven't paid for it yet, but we sure will, most likely in 30 days. So our assets have grown to 37,100, but now we have a liability of 7,100. When subtracted, brings us back to our famous $30,000 in equity. We provided some services for cash. Apparently, Fast Forward is some kind of consultant. Okay? Somebody came to us for our service, and we met with these people, and we gave them some advice, told them what to do, and they paid us $4,200. Wow. Cash obviously went up $4,200. But where are we going to put that other half of the equation? You might notice already something I've not said. Every accounting equation requires two accounts. Two accounts. Well, we know the cash went up. Well, say hello to revenue. Revenue is your sales. Revenue is a synonym for the word sales, if you will. Revenues always increase equity. Every time you record a revenue, you are increasing equity. So equity has now gone from 30 to 34,500. We still haven't paid the debt we owe on the supplies we bought on account, and we received cash from a customer. Here we go, expenses. Wow, we have to pay the rent and employees. What are we going to pay them with? Cash, huh? So we know cash is going to be reduced. We're going to record an expense, and we're going to call it rent expense, 1,000. Salaries expense, 700. Remember that the balance in the expense accounts increase, but in so doing, they decrease equity. Expenses reduce equity. So let's see what we're talking about. We incurred an expense. The expense went up, and by going up, it reduces equity. Every expense recorded reduces equity. Every revenue increases equity. And here's the cash reduction. And we're still in balance. Remember, expenses decrease equity. Well, we did some more services, huh? We're a consulting company. I guess our product is talk. Somebody comes to us and we consult. We provide services for credit. or on account. On account of nobody had money. So we did some consulting work and we rented a facility for $300 to a customer. Both of them apparently for credit. For credit. These people owe us money now. This customer, whoever it was, now owes us $1,600 in the future. And whoever's renting the facility owes us $300. I worked a long time for a manufacturing company in downtown Los Angeles, and it was kind of a big factory, and we rented the top tier of the factory as apartments. So that was a nice little revenue stream. Happens a lot, that type of thing. Take a peek. Peekaboo. Accounts receivable went up $1,900. We are going to be paid $1,900 in the future. Accounts receivable is the opposite, of accounts payable. The people who came to us for consulting, they're showing this 1,900 as accounts payable on their statements. One man's receivable is another's payable. They're the same transaction. Hey, look at this guy's paying us. In just one slide, we're getting paid $1,900 for consulting. Wow. Our cash went up, asset, and accounts receivable goes down. Accounts receivable goes down. We're not recording any revenue here. This payment is not revenue. This is payment for revenues we recorded earlier. 1,900. Let's see what we got here. Cash went up 1,900. Receivables down. We add up all of our assets. We come to 41.5. Assets equal liabilities plus equity. We add these fellows across, we get 41,500. Needless to say, the accounting equation can never be allowed to go out of balance. I don't think it's possible for you guys to ever worry about that, because in the year 2024, no financial system is going to let you post an out of balance or one-sided transaction. I just don't think that's possible. Back in the old days, when I had to do this in pencil, yeah, you can make a mistake, you go out of balance, and then you got a big headache. Now we're paying money that we owe, payment of accounts payable. Let's see. Our cash, sadly, cash is going to be reduced, but so is our debt. So is our debt. Get another peek. Cash is reduced. So is our debt. We no longer owe 7,100. We owe 900. And by the way, jump in with any questions. I tend to start rolling in the old New Jersey language here, and I maybe go too fast. So, jump in there if you need and say, hey, buddy, slow down a bit, huh? Let's see what we have here. Ooh, a dividend. They recorded, declared, and paid a dividend. Isn't that lovely? A dividend. A dividend reduces equity. A dividend is giving away part ownership of the company to a shareholder. I own a little bit of Coca-Cola stock. Every year I get a check for $200 from Coca-Cola. Coca-Cola, their cash goes down and their equity goes down as well. Dividends reduce equity. So let's take a good look at this final transaction before we get to the statements. Cash went down, dividends went up, but dividends, like expenses, reduce equity. So assets equal liabilities plus equity. And just like there are different accounts for assets, you can have different accounts for liabilities. Equity, the total number, consists of the common stock. We can call it owner's contribution. In other words, money used to start the business. Then he ran the business for a month. He had sales of 6,100 or revenue, expenses of 17. So this business made a profit of 4,400, and he felt flush enough to pay 200 in dividends. So let's take a look here. 4,800, 9,600, 26,000. 4,800, 9,600, 26,000, 6,200. You get the picture? This is the end of the month. We've been recording transactions the entire month. We bought supplies, we bought equipment, we sold things, we paid for things, we took on some debt, we invested money in the company. At the end of the month, here's where we stand. Our accounting equation is in balance, okay? In balance. What are we going to do with these balances at the end of the month? Guess what? We can now prepare the simple trio of financial statements we need to make. Say hello to your financial statements you'll be seeing forever. We're going to prepare an income statement, which is simply, and I use the word simply deliberately, because essentially all it is your revenues minus your expenses. That's going to give us what we call net income. Now, we know this company had a profit of $4,400, I remember. We have to do the income statement first, because remember, revenues increase equity, expenses decrease equity, so we have net income, thankfully. Net income increases equity. That takes us to our second financial statement. The statement of retained earnings could be called statement of owner's equity, statement of retained earnings. We have beginning retained earnings were zero because we're a new company. We are now going to increase retained earnings with the net income and subtract the dividend. And that gives us what we're going to call ending retained earnings. Let me explain what retained earnings are. It's another component of equity. Retained earnings is the equity account where you record the net income earned every time you close the month, every time you run financial statements. You start a company your great-grandfather started a company in 1920, 100 years ago. He began the company, there was no retained earnings, he didn't do anything. The next year he made a profit of 1,000. Well, retained earnings is now up 1,000. He made 10,000 the next year, it went up 11, etc. Retained earnings is the cumulative net income or net losses of the company from the day of inception. from the day the company began. If the company's doing good, maybe they choose to give out dividends, which reduce equity. And now that we have the ending retained earnings, we can prepare something called the balance sheet. The balance sheet is a presentation of the accounting equation. Assets are listed, liabilities and equity are listed, and they should equal. And then a fourth one we'll get into a lot of detail later is what's called the statement of cash flows. You had $1 million in cash at the beginning of the month. At the end of the month, you had 2 million. You want to be able to tell the boss what was the source of that extra million. Did it come because you borrowed money? Did it come because you sold an investment? Or did it come from selling your product, the operation? Take a little peek here. Look at your income statement. You're seeing this for the first time. You always start the company name, income statement for the month ended, or for the month of, or month of. That's important verbiage, which you'll learn about in a moment. And you can set this thing up pretty much any way you like. You want to set it up in a user-friendly manner, easy to read. And so this person said, well, we'll have a category, we'll have a header called revenues, and then we'll list the different types of revenues and get a total and show that off on the right. Same thing for expenses. Net income, 4,400. Not too tough. Now that we have that, we can now increase the equity by the amount of the profit. Retained earnings, of course, were 0 since this is a new company. That increases equity, and we said dividends decrease it. Our new retained earnings is $4,200. Our new retained earnings is $4,200. Let's look at the balance sheet. We are now going to take that $4,200 and drop it into an account we did not have before called retained earnings. Where did we get all these other numbers? They're simply the balances at month end. This is the balance of cash after we recorded all of our transactions. Oh, geez, what happened here? Well, that's not bad. Remember, we finished our transactions. Here's the 48, the 96, 26, 62. Hike. The balance sheet. 48, 96, 26, 62. All we're doing is copying them over and updating with the retained earnings. The sequence of the financial statements is locked in stone. You must do the income statement first because you can't do the equity statement or retained earnings statement without the income. So you must do the income statement first. You gotta do the retained earnings statement second, and then you can do the balance sheet. And then again, we're not going to get into detail yet on the cash flow statement, but you're going to be learning about this. And what we're saying here is the cash went up, right? $4,800. You're the boss. You want to know how much went up from operations. Well, you only generated $1,000 by buying and selling your product. So how come the cash went up? Well, you borrowed a bunch of stuff here, or rather you invested in the business. You put the 30,000 in and blah, blah, blah. And remember, we borrowed a big number here. cash flows. The only thing you need to know about cash flows right now is there's three categories to it: operating, financing, and investing. Financing is simply borrowing or issuing stock. Investing, buying a big fixed asset, a big piece of equipment, buying bonds or stock in another company. Operating is where you want to show you're generating money. Operating means what you do to sell your product to run the business. Okay. Come on, guys. As we get toward the end here, and thank you for hanging in with us. Every chapter, you're going to get a couple of metrics. Okay. These are the things that investors look at. So there's hundreds of them, and you'll get involved when you do the special FSA product. I have not picked the two companies yet, but we'll get to that. Compute the return on assets and interpret return on assets. Well, we can see it's the net income divided by the average total assets, but let's just back up a bit. What do we mean by a return? It's the amount of money you made on the investment, basically. You have $1,000 in your hands on January 1st. You take that money to Santa Barbara Bank and Trust. You put it in a 1-year certificate of deposit paying 3% if you're lucky. You come back a year later and they hand you $1,030. The $30 is the return. The return's a profit. So a return on assets, ROA, return on assets, ROI, return on investments, ROE, return on all kinds of things. Return on assets is stated as a ratio. Net income divided by the total assets. Net income divided by total assets. And typically you average out the assets. You take the total assets at the end of last year and the total assets at the end of this year, or month to month, okay? A lot of the work in this book is presented as being done at year end. Believe me, it's always done every month, okay? So here they're taking two companies in the same field, Nike, Under Armour, sportswear, not sportswear, but apparel, shoes, right? Return on assets. The current year, for example, Nike 17.4, Under Armour 2. Well, Nike, you can say, is doing much better than Under Armour is in terms of using their assets. What this is telling us is, and here's the interpretation, simple interpretation, Nike earns $17.40 for every $100 of assets they've invested in. They've invested in, they don't give us the numbers, but they've invested X amount in assets and they've earned this amount of money. So they earn 17.4 cents, if you will, out of every dollar of assets they own. 17% is pretty darn good. And what I find really interesting is 2 years ago it was even better, 19, and then it flopped. It dropped by more than half. I bet that was because of the pandemic. And then it shot back up. Under Armour is underwater a couple times. They're not even, theirs is really a net loss. And they're doing a little better here with 2%, okay? Whoa, there's a slide we like to see, huh? End of chapter. Does anybody have any questions? Any comments? What do you think, Pamela? Anything? Picking on Pamela. You okay? I can't hear Pamela. Hey, Liam, how you doing?
Pretty good. Were you changing slides there, or was it supposed to just be on the accounting equation one?
No, I was changing the slides. Why?
Oh, it was only showing the accounting equation slide for a while. I thought that was part of it.
Oh, well, I'm not sure. No,
That's
no.
okay.
As
I'll
far
just
as
look at the
I mean,
slides.
hopefully you saw what I saw going through it. Okay. All right. Thank you for hanging in there, everybody. Spread the word. We have to meet again on Wednesday, 9 o'clock, and hopefully we have a real good semester. Okay. You take care, everybody. Bye bye.
Thank you.
Bye, Professor.
Good night.